One of the scariest things a taxpayer can do is open their mailbox and find an IRS audit letter. Knowing that you're going to be the subject of an IRS investigation can be terrifying and debilitating. In this video, we cover everything that is an IRS audit and what you can do to come out with as little damage as possible. Hey guys, it's Josh Kahn with Anthem Tax, and welcome back to the Tax Workshop. To fully understand how to fight an audit, it's important to know what an audit actually is. It could certainly be confusing because the IRS designed it to be. Most people just have a general idea that the IRS wants to examine a specified year or years of a tax return. But there's much more to it than that. At its core, an IRS audit is an examination of expenses, meaning the IRS is questioning how much income a taxpayer attempted to write off and expenses. This could be in various expense categories, but the most common currently are home office expense, mileage and gifts, and charitable donations. You see, while taxpayers are allowed to have these expenses, the IRS limits these write-offs because it decreases the amount of taxable income that they can collect on. And that's where they take issue. But the IRS doesn't stop there. They feel that as long as they're going to audit and spend their resources to do it, they're really going to take a deep look into the taxpayer's financials. This includes auditing up to 6 years of returns, or even worse, subpoenaing a taxpayer's bank account records to see if there was any unreported income that could be taxable. It's a really intrusive experience. You're probably saying, okay, Josh, we know what an audit is. But what do we do about it? Well, I wish it was that easy. You see, the IRS has completely changed their procedures regarding audits. It used to be that every audit was done in person by an audit officer, and that worked for years. That was until the general public wised up and realized that they can hire representation. And at that point, the in-person audit wasn't as monetarily beneficial to the IRS anymore. Instead of using valuable resources to audit a taxpayer's return in person, the IRS devised a brilliant plan. The IRS launched what are called correspondence audits. This process starts with an unassuming letter, alerting taxpayers that the IRS wants to take a look at a few expenses on a certain tax year, and they casually ask for substantiation without causing too much concern. But just like Admiral Akbar says, it's a trap. Thousands of taxpayers fall for it every day. See, this non-threatening letter makes taxpayers believe that it's not an audit, so they blindly send in their information that the IRS requests. And almost 100% of the time, the substantiation is rejected and the IRS assesses a larger balance, plus examination penalties and regular penalties and interest. And if the IRS is successful in milking 1 year, rest assured they're gonna start looking at more. It's an ingenious plan and it works. So how do you protect yourself? Well, I would suggest if you do get a letter that it appears the IRS is looking at your return, no matter how unassuming, call an audit specialist. Do not send in your info, and really consider talking to someone who did not prepare the return, because in most cases, those people cannot effectively represent you, and they'll be looking out after their own clients before you. They don't want to get their other clients audited. Perhaps you should talk to a tax attorney, or even call us here at Anthem, as we handle audits every day. For Anthem Tax, I'm Josh Kahn. Thanks for watching. If you like this video and you'd like to see more like it, don't forget to like and subscribe, and don't forget to hit that bell icon so you can get notified on more videos like it.